Okay, let's unpack this. We're diving deep today into a really interesting piece called Berkshire Hathaway, Navigating Buffett's Succession and Market Impact.
Mhm.
Our mission really is to cut through the noise, pull out the key insights from this analysis, and, give you a clear picture of what's happening at Berkshire Hathaway, especially after Warren Buffett's, well, pretty significant
It
announcement
really was significant.
and what it might mean for the future of this absolute titan of a company. Honestly, when I first saw the news and then the market reaction right after, I was genuinely taken aback by the volatility.
Yeah, I think a lot of people were. This is truly a landmark moment, in the financial world.
Yeah.
And this analysis we're digging into, it really helps put things in perspective.
You're right.
It's not just like any CEO transition. This is the changing of the guard after, what, more than 6 decades?
60 years, yeah.
It carries immense weight.
So the core of it all, the big announcement itself. After all that time, Warren Buffett said he'd be stepping down as CEO. End of the year.
That's right. And that was May 2nd, wasn't it? During the annual meeting out in Omaha.
Yeah, power plant.
But it's important, as you said, he's not just vanishing. He's moving into the chairman role.
Okay, so still involved, just differently. And the person stepping into those, well, iconic shoes.
That would be Greg Abel.
Hmm.
He's been named the successor, the CEO designate, basically.
Abel. Okay. I mean, he's been talked about as the heir apparent for a while, hasn't he?
He has, yeah. But the official timing, the announcement, it just gives it a whole new urgency.
Right. Now, this is where things got really interesting and maybe a bit bumpy.
Yeah.
In the market, I mean, according to the data here.
Oh, they certainly did.
Yeah.
Since that May 2nd date, we've seen, well, significant choppiness in Berkshire shares, both Class A and B.
The numbers really spell it out. Shares dropped almost 9% from their highs around that time.
Yeah, nearly 9%. And to really see the impact, you have to contrast it, like the analysis does.
How so?
Well, think about this.
Yeah.
The S&P 500, the broader market, it actually gained 5.5% since May 2nd. But during that exact same period, Berkshire's A shares down 8.9%, and the B shares fell 8.6%.
Wow. Okay, so a definite divergence there.
The big one.
The analysis does mention a bit of a bounce back more recently, though.
A slight one, yeah. Shares rose about 1% last Friday, it says. So Class A got back towards $740,396, and Class B near $493.53.
Okay.
But still, that immediate sharp drop, especially when the rest of the market was climbing,
Oh,
it makes you wonder why. Why would a planned transition for such a famously stable company cause that kind of reaction?
that's the million-dollar question, isn't it? Or maybe $1 trillion in Berkshire's case.
Maybe. But that reaction, it really gets to the core of what the analysis calls the Buffett legacy. I mean, Buffett is just so much more than a CEO.
He's a symbol.
Exactly, a symbol of value investing itself. His style, straightforward, approachable, and crucially, that unbelievable track record. It's built this almost mystical trust around the company.
Totally. I mean, he built it into a $1 trillion conglomerate just through decades of smart moves.
Right. And he stayed adaptable, too.
Yeah.
Think about that huge Apple investment.
Oh, yeah. Massive success, which, the analysis notes, Charlie Munger apparently nudged him on.
Right, even late in the game, willing to adapt.
Yeah.
So a lot of this market reaction, it feels like it stems from investors just grappling emotionally with the idea of Berkshire without Buffett right there, making the calls day to day.
Even with all the diversification, I mean, Geico, Burlington Northern, Dairy Queen, these are huge, stable businesses on their own.
They are, but the sentiment is powerful. And then there's another potential factor the analysis brings up, adding to the uncertainty.
What's that?
Reports that Ajit Jain, the head of Berkshire's massive insurance operations, a huge part of the business,
Yeah.
that he's also maybe considering retirement.
Okay, so potentially losing two absolute pillars of the company around the same time. That could definitely amplify nervousness.
Exactly. As the analysis suggests, the market, well, it just doesn't tend to, change much, especially when it involves figures as legendary as Buffett and maybe Jane, too. Sentiment plays a huge role, particularly short-term.
Okay, so we see this dip, driven largely by sentiment post-May 2nd. But here's where the analysis throws in a really interesting curveball. It also points to other data showing, well, remarkable underlying strength.
Yes, and that's what's so fascinating here. You have the recent drop since the announcement, driven by that sentiment. But then you look at the year-to-date performance, and it tells a frankly very different story about the company's fundamentals.
And the numbers back that up.
They really do. Year-to-date, both share classes are actually up nearly 9%.
9% up for the year, I think.
Precisely. And get this, that actually beats the S&P 500's gain over the same period. which was more like a modest 2%.
Wow. So despite the succession news and the recent dip, the longer view this year is still strong, outperforming even.
Exactly. It suggests that, underneath the headlines and the immediate reaction, the company's core operations, its value proposition, they remain incredibly solid.
The analysis brings in analyst views too, right? Like UBS's Brian Meredith.
Yeah, and he still sees Berkshire as a solid buy, according to this.
Though it's fair to mention the piece also notes some lingering analyst concerns. Things like weaker dividend income compared to some other companies.
Right, weaker dividends, and also the fact that Berkshire decided to pause its share buybacks recently. Those are points some analysts are watching.
Yeah, Buffett himself, he seems pretty bullish on the company's value, even right now. The analysis quotes him saying Berkshire's intrinsic value is maybe 9% higher than where the stock is trading.
Yeah, and hearing that directly from Buffett, I mean, that's a powerful statement, isn't it? It shows how he sees the company's real long-term worth, looking right past these short-term market jitters driven by news and feeling.
Okay, so looking ahead then, the spotlight really shifts to Greg Abel now, taking the CEO reins.
He is, yes, Buffett's hand-picked successor. And the analysis describes him as bringing, significant energy, a very hands-on leadership style.
Hands-on how?
Well, he's apparently known for really diving deep into the details of specific subsidiaries, especially ones that might be struggling, and working to turn them around.
Okay, so an operational focus maybe, which could be good. The expectation then is that he'll carry forward that value investing legacy.
That seems to be the plan, the anticipation. Look, any transition this big is going to have challenges. That's natural. But the analysis really reminds us of Berkshire's stability factors.
Like the diversification we mentioned.
Exactly. It's huge, diverse holdings. It's incredibly strong balance sheet, that disciplined way it allocates capital.
And it's weathered storms before, big ones. The analysis mentions that history of resilience, right?
Absolutely. I mean, think back to 2008, 2009, the financial crisis. Yeah. Berkshire shares dropped, 48%?
Oof. Yeah.
They came through that and other market crashes and usually emerged even stronger. That history matters.
So, putting that all together, this dip we've seen since May 2nd, it really does seem, based on this analysis anyway, to be more about investor feeling, the sentiment around this huge change at the top, rather than some fundamental crack appearing in the company's strength or its long-term prospects under Abel.
I think that's a fair reading of what the analysis suggests, yeah. More sentiment than substance driving the recent drop.
So let's try and pull these threads together from the analysis. What does this specific situation mean for you, the listener, if you're looking at Berkshire right now and maybe wondering what to do?
Well, I think the key takeaway, really drilling down into what we've discussed here from the source, it's a classic piece of advice when it comes to Berkshire. You really need to focus on the long game.
The long game. Yeah, that feels very Berkshire, very Buffett, even as he steps back.
It does, doesn't it?
Okay, so wrapping up this deep dive, change is definitely happening. A big change at the top of Berkshire Hathaway, Buffett moving to chairman, Abel becoming CEO. The market reacted instantly and pretty strongly, seemingly driven by sentiment around a legend stepping back.
Understandably, perhaps.
But the underlying strength of the company, its vast portfolio, its track record of resilience, and, the apparent capabilities of Greg Abel, it all points towards keeping that long-term perspective front and center.
It's a huge transition, no question.
Yeah.
But that foundation, built over decades, it seems incredibly solid still.
Exactly. And this leaves us with a final thought, something for you to maybe mull over, prompted by these contrasts we've seen in the analysis today.
Okay.
Consider the market's immediate sort of knee-jerk reaction, that share price dip since May 2nd.
Right.
And contrast that with Berkshire's strong year-to-date performance leading up to it, and even including it. And then add in Buffett's own assessment that the company's real value is still significantly higher than the stock price. What does this specific situation, this divergence, tell us about that fundamental difference between, say, short-term market sentiment driven by news, emotion, headlines, and the long-term fundamental value that's rooted in a company's actual assets, earnings, and operations? It's a really powerful distinction to keep in mind, isn't it?